Hi and welcome to the Market Alert for Friday, the 28th of May 2021. So just before we get into the alert, Spring Bank holiday on Monday, Memorial Day for the US, so both markets closed, long weekend. Let's hope the sun shines. Main headline really is not this one. Let's just move on to this. It's a very quiet news. Retail investors storm back into market. This is what they're buying. What are retail investors buying? Based on Goldman's small lot trading analysis, there are the 50 stocks where retail was the most active yesterday in shares and options. That's the best headline for yesterday. So we can see we're going into a holiday weekend. But one of the fascinating thing is this one, where the Fed explains why stocks melt up in overnight trading. Well worth a read. They would call them pajama traders. And there's a pattern which, again, we've observed for a long time, how prices are moved higher in the overnight market to only see selling coming in the cash market at 2:30 for the Dow, and the same in the DAX in the morning, where the futures are moved higher from 7 a.m. So, watch out for the pattern from the pajama traders, as they're known. We've seen that. Implied volatility is up slightly yesterday, 13.44, 13.27. 13% seems to be that sort of base level now, whereas prior to the virus, we used to get down to 10% and below, but the new floor appears to be this 13 area. So, again, just an observation there. News today, just a couple. We've got 130 and 245, we've got the core price index and the Chicago PMI. So let's have a look at the Dow. We'll start off with this, find the chart. We'll go to the daily chart, and you can see yesterday we managed to drive through this level here, which I'll just redraw for you because it should be on that one. And you can see we had a look at it on Tuesday. Wednesday the market was an inside bar, and then Thursday the market drove higher and went straight through this. So upside wise, what we're looking for from this high to this low, that's the main swing point there. Again, you've got this 89%, which is going to be crucial. That's the one, as I mentioned yesterday, we're looking at to see if the market fails that. If it does, then we go this way, and if we break through, then we attack the new make it a new all-time high. So let's just get rid of a few of these off here. We can get rid of the downside at the moment as well. Market's above the 5 and 20 bar moving average. I'm just having a look at the possibility of drawing from here to here as well, just to see if any of these fib lines actually, there you go. So it's a major 89 level there. It's on 2 points from there to there, and then from there to there, projected back up. So major area for the 89%. You want to keep an eye on that one as prices attempt to move higher. I'll just redraw that back in. More haste, less speed. So from this high to here. So keep an eye on these areas here as the market attempts to move to the upside. What I'll do is just drag these out so that you can see them separately and see the numbers. So let's save this and have a look at inside of yesterday, 30-minute Dow. Again, the pajama traders moving the market up on the overnight market. And also we had some news with the weekly jobless claims as well, and the GDP figures, which were bullish, sent the market up, as you can see there, 200 points before coming back, and then the market trading sideways in the afternoon. But from here back to here, you will see that the market came back to 89%, sat on the BRN there, right in this area. You've got all of this demand there as well. Prices turn back to green, and then there's further demand there to hold the market at this level before prices were brought back. And they came back up initially from this high to this low, projected back, and again you'll see them stopping at 78% there, and you can see there 78, 89, before breaking through. So the market's currently trading through yesterday's high on the Dow, but struggling to hold. Closed back below this psychological level. We'll see the market find some support at the close, and if we break through this, we could head back to the DP level there. On the DAX, we've got a situation here where also the market yesterday finding support at 38%. That was the low for yesterday, and then it came all the way back for this market. I'm just going to remove these, and let me just draw in the upside targets as we've got the new low there. So there we go. So we're through 38 and 50 and then 62 and then all the way up to the 89 is going to be important. Now, with it being a bank holiday, they tend not to like the market going down over a long weekend. They get a bit of indigestion from the portfolios losing value over the weekend. So even though the market's showing a bit of weakness at the moment on the overnight, again, you'd expect the market today to actually try and finish on the highs. That seems to be the pattern that we've had. But at the moment, we're stuck in this sort of sideways range as well. Again, you can see the retracements inside of here. Yesterday, in the longer time frames, down to the 38% retracement, which tied in with this psychological level. They bought into the market, you can see it there, and then it was a case of bringing it back all the way through. There's an interesting 30 minutes there with the news. The market received this as good, came back, and then they reversed it when the Dow opened, trading up to the 200 MA, and then you've got some selling coming into the market, supply. This comes into the market, you get a small retracement back to the 200 MA before the market retraces, and again you got that 89 before the market reverses back to the upside. So in a bit more detail in the smaller time frames for yesterday, I'll just drag this back. You can see in the morning there, the market trading down to again that same point. See them buying in here. And it's a bit messy to begin with, to be honest. We had the futures market open, started to move higher, and then it was sold into, and they brought the market down straight away. The weakness continued until we got to that 38% in the daily chart, where the market bounced, and then that was it really, sideways. And then you'll see the news, that's the claims and GDP. The market then moving to the upside in the pre-market of the Dow. And then when we opened in the afternoon, it was just a damn squib. And this is what it was saying in this article. And this is something that I've noticed of late. The DAX doesn't really do a lot in the afternoon because the Dow tends to find itself being sold off initially because they've ramped the market up and then they come and sell in the cash market, get a good price to take profits, and then move the market higher again in the evening. So you can see there where it was all brought back, and then you'll see prices moving back up before the Dow close. But overnight we've got prices stuck in a bit of a range really. They came up and had a look at yesterday's high, but so far in the early hours hadn't actually broken this. And as we move across there, you can see that at the moment we're just sitting at the 200 MA, and the close need to get above this and the high in order to move to the upside and also break through, drive through this area here. Failure to do this will retest the DP, and that will be interesting because if it can hold at the DP, then we'll move to the upside, and if not, there's always a chance that we would retest the low, but that's a long way down here. That takes us back to this 38% retracement for yesterday, which given that it's a holiday weekend, I would think is highly unlikely. So the metals markets, quick look here. Silver's under pressure this morning, stuck in the sideways range. You can see this now, it's clearly defined. Market consolidating. With a bit of luck, it'll break through here because it's got to get through that $30 range that we can see up here that happened on the 2nd of February. So we get through this, it says 29 49, but $30 is going to be the area, and also staying above 28 seems to be a bit of a problem at the moment for silver prices as well. So watch for a pullback to the 50 area and the 20 bar moving average as well. Given that the markets are going to be thinly traded today, they could continue to have a bit more of a shakeout as well to the downside and support the dollar. And you can see this happening as I'm recording at the moment. We've just broken the DP, but you can see them buying back at the moment as well. The volume is greater in this bar than the previous bar's range at the moment, so there's a bit of buying back at this level. And in the 15-minute you can see this as well. At we got the 27.50 down here and yesterday's low as well, and this was happening yesterday. You can see them buying back at the previous day's low as well, and at that psychological level 27.50. So it seems to be supported at the moment, so I wouldn't be at all surprised if we don't get a shakeout down to the 27.50 level, and maybe a spike through to yesterday's low at 27.45 as well. And the reason for this is the dollar. Yeah, the dollar's finding some support, isn't it? It's moving back to the upside. So what I want to do here is this, just to see where we could get this nonsense ending with the dollar moving to the upside. So from here down to the low that we had on Tuesday, by the looks of things, this is where we want to see the dollar find resistance at that 78.89. Takes you back to here. We'll be through the 20 bar moving average though, but at the moment the dollar's got a bit of a bounce, and again that's consistent with going into a holiday weekend. You wouldn't want your currency being devalued before we're going into a long weekend. Meanwhile, gold also sideways at the moment as well. No surprise there, but looking a lot stronger than silver, which is bizarre given the gold silver ratio of around 70 at the moment, but won't take silver long to catch up. It would accelerate faster than gold given the opportunity. So probably a situation here where the price won't move through that $28 prior to the weekend in case it gets slammed next week, whereas if they go through on Monday there's a better chance of it holding, I suspect. Could be wrong, but that's would make a lot of sense. And yeah, that's it for today. Quick roundup of where we are, what to expect. It all seems fairly quiet on the overnight at the moment with the DAX. So just a quick look at the Dow as well, just to see where we are on this. Let's just go down to 1 minute. Yeah, we've got a bit of support there. I'll look at the 5 minutes. It'll be a bit easier to see the consolidation phase that we're in at the moment. So yeah, the Dow sideways there at the moment as well. Okay, that's it for this one. Have a great weekend. See you on Tuesday. As ever, thanks for watching. See you in the next one.